welcome to another training from them awesome lessons that we get to learn in that powerful book, y'all. So we've been had some really good training, and
Oh yeah, I
we
made the
really
bread.
have some.
Really want to make the bread. Is it good?
We can mute out everybody. I appreciate it. Thank you. And we've had some really good participation and some good trainings. I really want y'all to know I'm just excited and happy to see how well y'all are picking everything up and y'all are learning it. And I wanted to ask the panel, are y'all okay with having another like interactive call where we can kind of be interactive instead of waiting to the Q&A? Is that all right with you, Barbara, Johnny?
Oh, sure, of course.
I'm okay. I'm okay with it.
Yeah, just open it up. We'll do it that way. All right, y'all. So let's jump into another training from our lessons, and I'm gonna ask Laura if she can help us out with the quizzes so she can be ready. But if you can't, Laura, let me know, okay?
Yes, I'm ready.
Okay. So Dr. Barbara, let me go over to you first, and so we'll stay in our normal order.
Okay, yes, sir. So here's our disclaimer for the Futures and Commodities One-on-One Trading Group. Trading and investing carries a high level of risk. You could lose some or all of your investment. Trading commodities or any other financial instrument may not be suitable for all investors. Before deciding to trade, you should carefully consider your investment objectives, level of experience, and risk appetite. We accept no liability for any losses or damages you may incur. This means you alone are responsible for your actions in any trading or investing activities. Back to you, over to you, Ms. Thora.
Okay.
Yes.
Okay, so now we have the quiz. And the first one is, when the market is trading down, everyone is losing their money. Is this A, false, B, true, or C, not sure? So I'll say it again. When the market is trading down, everyone is losing money.
False. I say
Is-
false.
Okay. So we have a false.
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 Anybody got anything different?
Nothing else different. It's false. Ain't no other answer.
Everybody's saying false. The market trading down now, y'all. So it's going down. Everybody losing their money, ain't they?
You can make money when the market goes down.
Yes, that's correct.
Yeah, for those of us in this crew, we don't lose money when we go
Tell them again, Rob, for the folks up in the nosebleeds.
Tell him, Rafi.
Very good.
Tell him.
So
Okay.
just to make sure we clear on this, y'all say that everybody's not losing their money. Somebody's making money when the market's going down. So who's making money when the market's going down?
The bear clause.
Mm-hmm.
Who is that?
That's the small
I
speculators.
think if y'all look at
The person that
look
sold
at Jamal's picture on his screen, and you might have a clue.
The bear clause.
Yeah.
The bears are the ones making money when the market's going down. The bulls are losing. So you're absolutely correct. Not everybody's losing when the market's going down. Very good.
Okay.
Go ahead, Ms. Thor.
So the second quiz is formation on the charts, or formation form on the chart. Which are the following formations that we'll watch for? Formations form on the charts. Which are the following formations that we watch for? A, is it a false start? B, a bottom formation. C, sideways channel. D, W formation. E, F formation. Or sorry, E, top formation. E, end of the line. And G, not sure. So I will say it again. Formation forms on the chart. This we know. But which are the following formations that we watch out for? Is it A, a false start? Or B, a bottom formation? Or is it C, sideways channel? Or D, W formation? E, top formation? F, end of the line? And G, not sure. Which formations do we look for?
Top, bottom, and sideways channel.
Okay, someone said, P. Brooks says, top, bottom, and sideways channel. Do we agree? Anyone have a different view? So what she is saying is B, C, and E.
Is she right, Thor?
She is correct. And Jamal says B, C, and E in the chat.
Somebody reading that manual. Go ahead, Pam.
Yeah.
All
And
right.
that's it. The last one was a bonus question. That's on the 13th.
Yeah.
And Mr. Corn is asking us to name at least 3 people that have been very influential to you in your journey trading in the future market. Yeah? So I really think,
No, actually, Thor, I was asking that's been influential to me.
right.
Yeah,
So
in
it's an
my journey.
individual thing. It's an individual thing. So I'll start first. The 3 people that are influential to me are 1, Devin Wright, a mentor. 2, Barbara Warren, and 3, Dr. Mel. Delvin, because he is always there to teach us, and particularly Barbara and Dr. Mel, they actually held my hand, reached out to me, held my hand, and really brought it home. The little things that I wasn't getting, I was able to get it through them. And I do appreciate all 3 of you.
Awesome.
Okay, so the question was the people who are influential to us.
And your journey, yes.
To
Thus far.
Delvin. To Delvin. I don't know if everybody understands the question.
Mhm.
At least 3 people that's been influential to my journey. Who can
Personal
tell
journey.
me 3 people that's been real influential in my journey?
Who was this?
Whoever your mentor is, that would be one, I'm sure.
My mentor.
Yes, sir.
That's
Also,
I get that one out of the way by saying
That's Kid
that's definitely
Roberts.
number 1, Pam.
I would
That's
say
number 1, Pam.
I would say Johnny would be too, because that's that's your boy. He helped break it down too as well. And I know you mentioned before how he, a lot of things you learned from him. So I would say Johnny got to be on the call with us.
Okay.
I would say Dr. Mel and Miss Warren for writing the book.
And
Okay.
Eric McBride.
I could say other people too.
I've certainly misunderstood
Okay.
the question. It's your personal journey. So it would be Ken Roberts, Eric McPurdy, and I don't know. I can't remember the name, but you always speak about them. So I
Can't
want
remember the name, Thor.
no, I want to repeat the question. It's Delvin's personal journey, not our personal journey. And so I too misinterpreted the question.
That's okay. I want
Ian
to
Roberts
see.
is the mentor's name.
Yes.
That's right. That's right. That's definitely number one on the list. Is B on the call? I can't see if she's on the call, and I want.
Hi there, I'm here.
Hey, I hope I can pick on you for a second.
Mhm.
Can you tell me why you chose the answer that you chose on the quiz?
Well, Ken Roberts, that's the ultimate. You speak about him a lot. Over the period of the different volumes, you've also spoke about Warren Buffett and how he influences you and what he's taught you. And I think you've even posted something about Warren Buffett on the platform. Eric and Jimmy, I happen to have gone back and listened to some of the earlier volumes. And there's one volume in particular that I urge everybody to go back and look for. It's the volume 3, and it must be from about 5 years ago. And it was that volume in particular, series 3 of a previous volume 5 years ago. It was that volume in particular where I learned about the value that Eric McBride and Jimmy Cuffrey had in your journey to being who you are now, because you were trading alongside those guys. And Eric also
Absolutely.
comes to the retreats. You do the retreats with him. He's part of the journey of the retreats. So that's why I chose the 4 that I chose.
Wow.
Jamal said I did mad research. I've just been on a lot of the calls, that's all.
Wow. Yeah. So
Okay.
there was a lot of answers, but does anybody know why or have an idea why I had this bonus question in mind? Why I was asking the question? Do you even have an idea, maybe?
No.
One of the reasons I think you asked that is because I think most people have to have someone to encourage them.
Joyce, you hit it on the nose. You hit it on the nose. It was that reason exactly why. I remember how I heard my mentor speak about certain people who influenced him so many times that it made me want to go learn more about these people. You know, he spoke so much about Warren Buffett, and he spoke so much about Rockefeller, and he also talked about J. Paul Getty so much that I went and got their book because I heard him talk about them so much and how much they influenced him. When and these were people he kind of leaned on when he was, discouraged or going through some rough times. Everybody get challenges when it comes to trading, and you don't know who you may connect with versus who somebody else may connect with. But yeah, you have to have some people who you can lean on, who can encourage you. And a lot of y'all, you said all the right names of the people who encouraged me throughout my journey. So, I don't think I heard nobody say a wrong answer, but just know it's been those all those people who've been a part of my journey, encouraging me in my journey. Matter of fact, if you have heard that call that V was just talking about, you would you may remember that we had a real devastating trade that made my friend Eric stop trading for a while, I didn't stop trading, but I changed up how I traded. Meaning, if you notice, if you know the sugar trade, you know that I was trading with a lot of contracts. But after what happened, I never wanted to do that again. So I started trading with one contract, and we could do what's called internal financing, where we can use our profits to buy more contracts while we're in a trade. And because of how that sugar trade turned out, you know, I kind of was hesitant about doing that again. But it was my friend Jimmy who kept pushing me and nudging me, you know, that I got to get over that. Now you can't let that stop you from trade with more than one contract. Matter of fact, he used that as something to challenge me to get over that barrier. So everybody who y'all named, they all had some kind of way where they was influential to me. And it was, like I said, it was my mentor talking about people who influencing him that made me go and learn more about those people who did end up being very influential to me out as well. So that was absolutely correct, B. Some of y'all should remember you've heard me quote Warren Buffett many, many times. I've been following Warren Buffett since I started trading. And some of you may know, yeah, the three people who I named, Warren Buffett, John D. Rockefeller, and J. Paul Getty, they all had very successful businesses that they were known for. But these are legendary traders in the market, but they also traded in the financial market. And when you can earn 8 and 9 figures in the market, you're a legend. No doubt about it. But I really just posted that question to have you all to have some other people that can encourage you to basically just equip you with more things to have in your arsenal to help you be successful. That's what that bonus question was about. So I appreciate that, y'all. So thank you, V, for letting me pick on you. But great job. Let's get into it, Barbara. What we got this week? We did, I think it was top formation last week and bottom formation the week before that.
Yes. So this week we are going to talk about sideways channel, another formation, and gaps as well.
Oh, well, you know, that's my favorite one out of the three.
I
Channel.
know.
And this book right here, you know, I happen to be kind of fond of this book myself, you know. I actually posted a picture on my birthday post today on Facebook holding this book because that was my gift to me. This book right here, y'all. I'm telling you, if you ain't got this book yet, you want to get this book. This book is something that I feel you probably heard me say it's going to be legendary. This book is going to be teaching people how to trade in the market for generations and generations and generations to come. And that's what I feel about this book. So it's very detailed, very more in depth that you will learn in the group or on the calls. So if you're really serious about this, you want to get this book. And before we jump in, I want to just say I saw some names come into the group on the call tonight that I haven't seen before. I want to welcome y'all to the call and tell you that we have an invite. We have a Telegram group that you may not know of or you may not be a part of, but I want to invite you to be a part of our Telegram group where we do those quizzes that you just heard us go over. And if Barbara can put the link in the chat right here on the call, you can click on that link and join our Telegram group. Appreciate that, Barbara. All right, let's get into the channel then and the gaps. Barbara.
Yeah, so this is understanding formation, sideways channels, support and resistance, gaps on the chart. This comes from lesson 7 in the manual Futures and Commodities 101.
Mm-hmm.
All right.
All right, get us started, Mr. B. Johnny B.
Okay, so, well, let's see. How does sideways channels form on the chart? It's really kind of an interesting formation, actually. First thing you have to understand is that when we have a uptrend, it's the buyers, right? Or the bulls are in charge, right? And when we have a downtrend, the bears are in charge. They put one way or the other, they either put a lot of money in or a lot of money, I don't want to say is lost, but they sell a lot. And then when it hits resistance or support, oftentimes on either side or during a 50% retracement, there'll be a period of consolidation where neither the buyers or the sellers or the bears or the bulls are in charge. And it kind of just moves sideways. But it's a consolidation period. Also, it's a time of uncertainty in the market. They don't know whether it's going to go up, whether it's going to go down. What's the deal with supply or demand? And sometimes it's an equilibrium. So, and then because of the indecisiveness between the buyers and the sellers, it kind of just goes sideways. Right. So these are some of the reasons of why or what happens during a sideways channel. Okay. We've talked about this on several times. Locating support and resistance levels on the chart. Okay. We draw trend lines. If it's an uptrend, it's usually connecting all the higher highs. And if it's a downtrend, we connect the lower lows. If it's a sideways trough, we do both. We take and put the line across the top, which is support, and across the bottom, lower lows, or excuse me, lows, which will show the resistance level. And the difference between the two depends on how volatile the market is within that sideways channel or in that trend. Let's put it that way. So at this time, we really pay very close attention to the price.
Hey, John,
Right?
if
Yes, sir.
if I may, man, I like how in the past how you always put it, man, when you talk about the fact when the market's in the sideways channel. One thing that's going on, the market's not making higher highs or higher lows. That's how you can tell you see a channel on the chart, correct?
Correct.
Yeah.
Now, the question also can be, can there be a slight uptrend or a slight downtrend or a triangle within that sideways channel? Okay. But for the most part, it's going sideways. And so what would be a triangle? Meaning, let's say all of the support levels are exactly the same, but the highs are having progressively lower highs. Right? We're still sideways on the bottom, or we could be sideways on the top. But either the support level or the resistance level is changing. But for the most part, it's sideways. Can you take this slide,
Okay,
Delvin?
absolutely. Why are sideways channels the easiest to trade? So if you were paying attention earlier, a little while ago, you might have heard me say that out of the 3 formations that we watch for, the sideways channel is my favorite. And you should be at ease to know that we're not looking for a lot of stuff on the charts. We're just watching for 3 formations. So it's not like we got 10 or 20 things we're looking for on the chart. So just know that it's only 3. The top, the bottom, and the sideways channel. But why is it that the sideways channel is the easiest to trade out of the 3? Let me say this. Johnny just mentioned on that previous slide that there's uncertainty in the market when the market's trading sideways, because it's typically like which way the market's trying to go. Everybody's unsure because it's trading sideways. My mentor used to say it like this: when the market is trading in a sideways channel, it means nobody's watching. Basically what he means is that it's a quiet market at the time when it's trading sideways. So to give you a visual of what that means, when you see the chart with the bars and the candles on it, and you see the long bars and the long candles, that means that the market, moved a lot that day. That means volatility. When the market's quiet and trading in a sideways channel, you won't see very short bars and very short candles because the market is not that volatile. And that's why it's in the channel. Remember, Johnny said the bulls are not winning and the bears are not winning. It's really like uncertainty in the market. So if you'll see a difference in the length of the bars and the candles when the market's trading sideways. Remember that. All right. But what's important to know that market is at some point in time, it's gonna break out of that channel. It's not gonna trade sideways forever. It's gonna come out of that channel either to the upside or it's gonna break out of the channel to the downside. Why is it my favorite and I feel the easiest to trade? Because I can be in position. I can be at home when the market breaks out of the channel. I can be in a position to catch it when it breaks out to the upside, or I can be in position to catch it when it breaks out to the downside. Either way, I'm in position waiting on the market to come to me. And then that's why it's the easiest to trade out of the 3. And here's what I really love about it. When I see the market trading in a sideways channel, a lot of times I look to the left to look at how long the market was in an uptrend or downtrend before the channel. Because in most cases, it's gonna duplicate the trend that it was in before the channel formed. So if it was trading in a sideways channel for 2 or 3 weeks, not all of the time, but most of the time, it's gonna duplicate by trading in a sideways channel for about the same length of time. So I can kind of almost know what to look for. But you can't, there's no guarantee that's gonna happen, but it happens a lot of times. Now, how would you try to be in position? I said something about being home, being in position to catch a breakout of a channel. And the way you do that is you will place an order to buy whatever market is you want to buy a futures contract if it breaks out to the upside, and you will have an order to sell a futures contract if it breaks out to the downside. Whichever way it breaks out, one of your orders are going to get filled, and you can just be in position, waiting for the market to come to you. That's why I love the channel. Matter of fact, let me ask a question, because I wanted y'all to kind of be interactive. Did everybody see in the group this week where John Muhammad placed a trade, a lumber trade, and he posted a screenshot of the chart where he got into this trade, made like $3,000 in one day. Anybody see that?
Yes.
That was a sideways channel, Jamal.
Yeah.
If you
Yeah, I
if you
think that's
saw
good too.
if you saw that screenshot of the chart that he had, it was trading in this sideways channel, and he caught it when it break out, and when it broke out to the downside, he traded the market down and made that money that day. You guys told us earlier on the call we can make money when the market trade down, and that's what John Muhammad did. So the reason I like the sideways channel is I can be at home and just sit and wait for the market to come to me. It's gonna break out sooner or later, and that's one of the best things to me about a sideways channel. Anything you want to add, Barbara, Johnny?
No, sir, that was perfect.
No, sir.
All right, thank you. Barbara, you want to talk about the gap, Barbara? You want me to?
You can go ahead, cover it.
Oh, okay. What are gaps on the chart? It's little glitches. That's all it is. It's glitches. It's a glitch. It's a computer glitch. That's where the gap is. Right? Ain't that where the gap is, y'all?
I think it's a glitch.
Absolutely not.
No, sir.
No, I think it's when the market closes.
Absolutely not. There's something that actually happens that takes place for a gap to form on the chart. It's not a computer glitch, or it's not a mistake. You know, it happens when the market trades a certain way. And we talked about this, y'all, but I think somebody was asking me, I think it was Steven was asking me about the gaps last week, and we talked about this. But let me explain this to y'all one more time to make sure y'all
Yeah,
get
it
it.
was me.
Yeah, I thought so. So the market closes. We're gonna use $5 for example. The market closed at $5 on Friday. Okay. December corn closed at $5 on Friday. And it's getting ready to open up here in about 30 minutes or so, 20, 30 minutes. And let's say it opens up at 5:15. When it opens up at 5:15, but it closed at $5, the fact that it opened up 15 cents higher than where it closed, it will leave a gap on the chart because it didn't trade up 5:15. It opened up already at 5:15. Does everybody understand that?
Yes.
Yes.
Yeah. Awesome. Yeah, when it closes at one price and doesn't open up at the same price when the market reopens again, it leaves the gap on the chart. And that's how it forms on the chart. But the thing about the gaps on the chart, charts do not like gaps. If you don't remember nothing I say tonight, remember that. Charts don't like gaps. The gap form on the chart is looking to try to get back to that gap and close it and fill the gap. And when it does that, it's not going to fill the gap by going right back over the actual spot where the gap is, because it can't, the market, the chart won't go back in time. It's going to trade through the price where the gap is. So it will come back and trade between $5.15 and $5 and fill the gap in that way. And that's how it closes the gap. And it doesn't always happen, but in most cases, you can expect the market to come back and close the gap at some point. When? You don't know. Could be right away, could be weeks, months. But a lot of times the market will come back and close the gap because they just don't like the gaps to be on the chart. So the thing you need to really remember when you see a gap on the chart, just know the market closed at one price and opened at another price. And that's how the gap forms on the chart.
So
All right.
let me ask you a question, Delvin.
Okay.
So if a gap forms on the chart and we go down and see another, we'll say top or bottom, then the gap would be a good target, would it not?
Absolutely. I sometimes use that gap as a target, Johnny, because of that.
So it's
Yeah.
not necessarily that when say we're in a uptrend and a gap forms on the chart, do we immediately look to go short the market, or do we wait till we get a signal?
You asking the group or me?
You either one.
Yeah, we always wait for a signal.
Thank you.
Yeah.
So the fact that there's a gap doesn't mean we're going to change position. It just means it will be, once it does change, is that it will be a target to where we want to watch for the market to go.
That's absolutely correct.
I hope y'all understood that.
Yes. Is everybody clear on that?
Absolutely.
Can I just ask a
Awesome.
question concerning the gaps? What
Mhm.
causes the market to what causes the market to close at one price and reopen at a different price? What really causes it? Do you all know?
It could be a
Usually
number of
something
reasons.
fundamental.
Mm-hmm. In most cases, it's normally that. It looks like Barbara was already ready for your question, Inga.
Oh,
Look like Barbara knew you was gonna ask that question. Do you see the screen?
Yeah. Yes. Thank you, Barbara.
Yeah, in most cases, it's fundamental, like Johnny said, but it could be a number of reasons. Yeah. Matter of fact, that's a really good question, Inga, because you'd be surprised how many people watch and pay attention and focus on the gaps on the chart. It's a pretty popular thing amongst technical traders, but a lot of times the gap can form from fundamental information, even though the fundamental trader is not even watching the chart. But it's fundamental news that a lot of times causes those gaps on the chart. Yeah. Yeah, you was right on time with that one, Barbara. uh, all right, types of gaps. All right, Barbara, read different for us.
Yes, sir. So there are different types of gaps. These are some of the most common ones. breakaway gap. It signals the beginning of a new trend, often after a sideways channel. So if you tend to look at see a sideways channel on a chart and you see a gap, is 9 times out of 10 is probably a breakaway gap. Continuation gap occurs in the middle of a trend, usually means the trend will continue. So gaps do have a purpose, and it directly relates to the actual trend that's formed in that formation. Exhaustion gaps occur at peak or trough of a trend, usually means a trend reversal. So a lot of times if you looked at a chart and you saw a gap and then next thing you know, the trend changed and went in another direction, it's an exhaustion gap. And then pattern gap are the most common, where prices close at one price and opens at a different one. Most of the time, they're very prevalent on the chart, pattern gap. So those are just some examples. So when you look at your charts now, you can look differently. When you see a gap, it's not just a gap. It actually has a purpose. It actually helps with that trend and the determination of it and the continuation of the trend itself. All right.
Awesome. Thank you.
All right, now we can go over the bar.
Anybody? Yeah, let's go over the bar chart. But anybody got any questions so far about the gaps or the channels that we talked about before we go to the chart? Everybody clear so far?
Mr. Delwyn, I just want to ask a question. Going back to the sideways channel, where you said that's your favorite part in trading, where you put a trade to sell and you put one to buy. Let's assume the trade that you put to sell is the one you're going to be making the money on. What happens to the one? Do you lose money on the other one? I know you're going to make money on the other one that going in because you put it in both directions. But the one that is not going up, which is the back where it's not buying, it's selling, and you have put a trade there. Are you going to adjust that to reduce the amount you're going to lose there? How do you deal with that one to the top? Just remind me, please.
I thought
Absolutely.
I thought that was the one that automatically stops you out from that position.
Yeah, I can do a couple things, Jamal. So just know that when it breaks out of the channel, it's gonna fill one of the orders, right? And you said in this example, it's gonna break out of the channel to the downside and fill my sell order, right, Inga?
Mm-hmm.
Okay, so when my sell order gets filled, I'm gonna be short the market, meaning I'm in the market trading it down. And I also had an order to buy, but that order didn't get filled. I can cancel the order all the way out together, or I can move the order down, bringing it down to where I want it, to be trailing behind the market. So I can use that buy order as my stop loss and move it, place it where I want it to be, or I can cancel it. But I don't want to be in the market without a stop loss, so I will probably move the buy order down to where I want to have my stop loss at, and I will be in the market short from the sell order that got filled. Does that make sense?
Yes.
Make sure y'all remember this. I said this before, but I want to say it again. Make sure y'all got it. You've heard Johnny say it before too. We want to make sure we understand when we hear the word stop loss, stop loss, stop loss. A stop loss is what type of order? What is a stop loss?
That's your risk exit.
Yeah, what type of order is it?
Well, it depends on which way the market is trading, right?
There you go. In this case, if my sell order would fill in Ingles' example, my stop loss will be what type of order, Pam?
If it was trading down, was the market trading down?
Yeah, I got fill on the breakout of the channel
Okay.
on my sell order. So I'm short the market. My stop loss is what type of order?
Oh, I'm sorry. A
A
buy
limp.
order.
Uh-oh, I'm
There you
sorry.
go.
Buy order.
Say it again, Pam.
Buy order.
Exactly. A buy order. So just remember that your stop loss is going to be a buy or sell order. In this particular case, I'm short the market. My sell order was filled. So my stop loss is a buy order. If I sold to get in the market, I have to do what to get out, Pam?
You got to buy to get out.
Exactly. Very good. Very good. You ready for it, Barbara?
Yes, sir.
All right.
I think I pulled some markets to look at since orange juice November, unless you had some in particular you wanted to look at, you and Mr. Johnny. I pulled some ahead of time.
Okay. Now let's look at what you got. See what you got.
Okay.
Said OJ.
Yep. Oh, orange juice, OJ November. There is the gaps and sideways channel in this particular market that we can look at.
Who can tell me where would you go on bar chart if you was trying to go find OJ in the futures market? Well, under what grouping would you go up under?
So
Go ahead, Jamal. Go ahead, Jamal.
Somebody been studying, haven't they?
yeah,
You gotta go, Jamal.
yeah, yeah.
Jamal always he always quick to the draw.
Okay, Barbara, what you got? Some gaps and the channel, huh?
Yes, lots of gaps and sideways channels. So if we look at this particular market, we look over to the far left, we see there's gaps here, but we also see that some of these gaps have been closed. So how do we know that these gaps have been closed? You see this gap right here that occurred on March 26, 2025, but it was closed here April 1st. So what it did was price traded back up on a different day and time and closed this gap here. So when Delvin was saying they're never going to close on the same day and time, it's no way for price to ever travel back to that day, trading day, because that day has gone. So it's going to close it at a different day and time. If you notice over here, this is what closed this gap that you see here. And it does that repeatedly throughout the market. Here's another gap way over here on April 17th of this year. But when we come over here, we see this particular trading day on May 22nd closed this gap that's way over here. So it does that repeatedly. We see this gap here on July 10th, but if we come all the way over here, right there to August 26th, which was not that long ago, it closed this gap that was all the way over here. And even this right here kind of traded down into it and really closed it too, right here for
They
July
closed both of them
30th.
gaps, Barbara.
Yeah, it did. It closed them both. It did. So really, I would say this right here closed it. So this is what gaps does in the market. The charts do not like gaps, so they tend to go back to them. And it could take weeks, it could take months, it could take years before they ever close gaps. Some markets take so long for the gaps to close, but they tend to close them. And if you notice, this one Has this gap been closed yet?
It has not.
It has not.
No.
That's because
Very
price has
good.
not traded back up
Right.
here to close it, but sometime in the future, perhaps it will. But right now, this is still considered a gap that has not been closed.
Hey, Barbara, I just want to point out something. Hey, go all the way back over to the left where you talked about that first gap
Yes,
that
because
was
I was
closed.
looking at something there. Yes, right there.
Yeah. Now, what I want y'all to see, you see where Barbara pointed out where the gap was closed at? It it, it almost looks like the market went up just to close the gap. You
Yeah.
see how it went up to right where the gap closes at, and then
Mhm.
it
Right.
went on about its business.
Yeah,
Yeah.
there's another gap right there.
Yeah. Yeah. And
Yeah.
this closed it
And then
here.
another.
Yeah, one right here.
Now go back over to those last two gaps you was talking about over here, all the way to the right. The one that got closed by the
Yes.
one that you see how that over to the right where it closed both of those gaps?
Yes,
Where we-
it did. This right here closed both of these. Yes, it did.
If you go all went up just to close the gap.
Yes, it did. And went on about its business.
Yeah,
Yeah.
it went. If y'all look all the way over to the right where it went up to close this gap at,
Uh-huh.
it went up to close the gap,
Uh-huh.
and then the market traded down to where it is right now.
Yep. It
Like
did.
that day we went up just to close that gap, and
Yeah.
then once it closed it, he said, "Okay, now the gap closed. Let's go on down."
Yes.
So I
Yeah.
like the fact that we can have gaps on the chart that we can pretty much use. Like Johnny said, we still stick to our basic. We still stick to what we do, but we just know that the gap on the chart and the chart don't like for the gap to be there, and at some point it may go and fill the gap. In some cases, it don't. It especially with the crypto futures, it takes a while for them to fill sometimes. But in this case, you can see how the market went right back to fill, and there's still some gaps on the chart, right? But you see how the gaps close. I hope everybody's clear on this. Now, Barbara, you said we had two things going on this chart that we talked about tonight.
Yeah, so we have sideways channels, and the charts make a lot of sideways channels. You can have some little bitty mini sideways channels. You can have really noticeable long sideways channels. Like this is a sideways channel. Price traded up and it went sideways. I put a horizontal line there so you can see prices trading sideways, but then it broke out, but it broke out to the downside and it traded back down and traded back up again. So this would be your sideways channel. So this is what Delvin was referring to. In this case, he would set two orders. He would put an order as a buy order above the sideways channel, and he would put a sell order underneath the sideways channel. And whichever one triggers, that would be his entry to enter him into the market. The other would be his stop loss. So in this case, the market went down. This would be his stop loss. And what he would do is he would manually, there's several things he could do, but one thing he would do as the market began to trade down, he would do this to his stop loss. He move it down. And the reason why is he wants to secure his profit, because if this turns back around, and let's just say you never moved your stop loss, and the moment this turns back around, you're in the red, and you're going to lose all your profit, so that's what he meant by that. And it went down, and a lot of times sideways channels are really good. They're also indicators in the market. The sideways channel itself is a huge indicator. The reason why is most of the time it trades in that direction after it breaks out for about the same length of time that it was in the sideways channel. So it kind of gives you a huge indication of how long do I need to stay in this trade. If you just look at the length of the sideways channel, it doesn't always do it 100%, but I would say probably over 90% at least, it trades in that direction at the same length of time as the sideways channel. It tends to do that upon its breakout. So if you look at this is an example of this particular market doing just that. It's about the same length of the sideways channel itself. I know it's a different color, so let me try to make it a different color so you can see it. It'll stand out to you. So this is about the same length the breakout is as it was in the sideways channel. So that's a huge indication for you as the trader. When you have them, that's what make them so fun too. That you kind of know hands down about how long you want to be in the trade. That's why they're one of the reasons why they're the easiest of the three formation to trade, really. It's another reason why. And Delvin does this all the time. He loves sideways channel. And this is why. So this is your sideways. We got some other examples. Mr. Johnny.
What is that chart?
This is Orange Juice November.
Okay.
Yeah, 25. Do you have one in particular you want to go to? I have some others, but is there one you want to go to?
No, go ahead.
Okay. All right.
October sugar.
October sugar. Okay. Excellent. That's one on the list.
I was watching October sugar, and I knew it was in the sideways channel, and I was watching it to actually try to catch it on the breakout. But I did something that I don't normally do. I kept waiting and waiting, and I never put my orders in to be at home, be in position. And if you look at the October sugar chart, you see what happened when it was in the sideways channel. So
Like it broke out and went down, and then
exactly, Pam. And I wasn't home like I would normally be, and I was watching this market, and I should have put my orders in, and I never did. But like Johnny pointed out today, we were looking at this chart. It broke out of a channel, but it's now trying to make a what? Who can tell me what it's doing now?
Broke out of.
What was that?
That's a sideways channel.
But it trying to do
What is
a downtrend.
retracement.
Retrace.
Oh yes.
It very good. It definitely did a 50% retracement. Like one of the things Johnny pointed out, but it's also trying to make a bottom formation. Right now, it's in the process of trying to make a bottom. We don't have a bottom formation yet, but we have a number one and a number two. But if you see the sideways channel that Barbara has marked off, that's the channel that I was watching. And I should have put my orders in, but I did not. And they broke out to the sideways. To the bottom, trade down, and I didn't get in the trade. But that's a good example of another sideways channel. So you had some more charts that you wanted to go to, Barbara?
Yes. Let's see.
What did we look at? Copper?
Yeah. We looked at copper. That's right, Johnny. I think it was. We looked at copper and we looked at lumber. What did you have, Barbara? You wanted to look? You had some. You say you already had some charts, right?
Oh no, I'm going to copper now. I can go to copper.
Okay.
Copper's a really good one to look at.
Cause every time I see that long bar, boy, I just shake my head. Ooh-wee. Oh man.
I've never
So,
seen that before.
Oh.
oh yeah. Oh yeah, that's what you call volatile market right there. So, Barbara, do we have a channel on this
Whew.
chart, Barbara?
Yes, we do. We have a few of them.
Mm-hmm.
So we have channels here. This is a channel. This is a small channel. And then we got some little bitty channels down to the bottom. So
So
we have
it's
several
small. I
channels.
can't see. Is
Yeah,
that
some of the
gap?
channels are really little.
All right, hit the 50.
Yeah, because they're not always going to be really long channels. Like if you look at you got to look for the higher highs and the higher lows. You got to look for support and resistant levels. And so if it's not making those, then it's a sideways. So if you look at this, how this market went up and came back down, if you look right here, that's a small sideways channel. Just so you know, and here as well, that is a small sideways channel. Because you have to remember when you are looking at a bottom formation and an uptrend, every two that it makes have to be higher than the previous two. Every three that it makes have to be higher than the previous three, but lower than the number two. And anytime you look at the chart and you don't see that, like right here, it went up, but it went across. So you know that is a sideways, but it broke out, then it went up some more, it came back down, and that's a little mini sideways, made another number two, came back across again, a little mini sideways. Then it came down, but it had this big long bar to come down again and come across again to make a little mini sideways. So the market does that. So every sideways is not going to be this long, noticeable sideways. The market, but that's an opportunity for you, but that's a different teaching for you to learn. Every sideways is an opportunity for you actually to be able to trade, and the market does it all the time repeatedly. Does that
It
help
makes
you?
me think, Barbara. I remember one time we was on the call. I think Engel was the one who asked me the question. Can you make money when the market is trading sideways? And I remember smiling because that's my favorite formation to trade. And I hope it makes more sense to you now, Engel.
It definitely does. I think it's going to be my favorite too.
It's by far the easiest to trade
Yes.
out of the three. It really
Yeah.
is.
Well, let me
I'm
ask this.
seeing that.
I know. So I want to ask y'all this question. Do anybody see anything else on the chart that we talked about tonight?
Gaps.
Yeah.
I was just trying to
That's right.
see on the end, like in August time frame. Are those gaps? Because it's really small on my computer. No gaps or no?
Yeah, that's gap.
Okay, thank you.
Yeah.
Have all the
So
gaps
let
been
me
closed?
ask this question. Yeah, I was finna ask the same question, Barbara.
Have they all been closed? Has every gap closed
It's
that you can
Barbara.
see?
Two of them I see closed. No, three.
It
So
looks like
This one
from
right, that right where
no
you
matter
are.
it has been.
This one right, the right one, the one next to it. Oh no, not that one.
I want to make sure everybody understands what we've been saying
That one
tonight
been
about how.
closed. This one been closed. That one right there.
Hold on for a minute, Jamal.
Okay, yes, sir.
It looks like
I want to make sure y'all understand what we mean when we talk about the gaps being closed, because the answer would be that yes, all the gaps on this chart have been filled and closed. And I wanted to make sure y'all clear on this because that's the answer that we were looking for. That yes, all the gaps have been closed. So if you're not clear on what we mean about how they get closed, now's the time for y'all to let us know. Do you understand when I say all the gaps have been closed and filled?
Yeah, I understand.
Yes.
Everybody?
Yes.
Yes.
Remember, the market trades back through that area that on the chart where the gap is, and that's how the gaps get closed. That fills the gap. So there's a lot of gaps on the chart, but the market has traded through that price area, and those gaps have all been filled.
I think that's July the 29th or the 30th. They close almost all of them.
Mm-hmm.
June 16th.
All right.
June
Awesome.
4th. And
On July the 29th or the 30th. That's
But
the monster.
Barbara,
That's the monster
isn't
right
this a
there.
gap?
okay.
Barbara, right where you are there, isn't that a little gap there?
Here,
But I'm not seeing that closed.
where you referring
So
to?
go down a little, come down a little, come down. Right there, where that's not a space between here, right there. If you go up a little more, yeah.
It
Or is
closed.
it, or,
It's closed.
right,
Yes.
it's closed?
Yes.
So June 30th.
Oh,
July
based on the last, yeah, the line below we're looking at. Okay, yes, we're looking at the
Yes.
line below. Yes.
Mm-hmm.
Yeah.
It closed.
Yeah. Yes, it is. Yes.
Yes.
Yeah.
Very good. Very good. Any more questions or comments about what we had or went over tonight?
No. I just want to
Sideways
say,
channels and gaps.
no, I just want to say that in regards to mentors, you are, I hope I'm speaking for everybody, you are our mentor to teach us these charts and these skills that go back and forth. Dr. Mel and Mr. Johnny, and also Miss Barbara. You guys are just like top notch. For me, you guys are my mentor. And I'm hoping I'm speaking for everybody else.
Oh man, we appreciate it, man.
Once
It's all
again,
about,
we appreciate you. Trust me.
this is how we learn, y'all.
Yeah, I appreciate y'all for real.
Yeah.
Thank you.
You clear on all this, Rashid?
Yeah, man. Yeah, I'm dialed in. I'm dialed in for real. Yeah, I'm getting it all.
Great. Okay. I think we had some good training tonight
Yeah.
on sideways channel and gaps, and looked at some real good charts with some examples of it. And yeah, just because the market's trading sideways doesn't mean we can't take advantage of it.
I have a question.
I had a question. Go ahead.
Go ahead.
Okay. We spoke about those last videos. Are they still available? I used to get them, but could I find them somewhere?
One more time, Thor.
When we spoke about the videos about 3 to 5 years ago, are they still available? And where can I get them if they are?
Yeah, on the YouTube channel.
Nope, they're not.
Every video is no longer available.
Right, that is what
So
I'm
there
saying.
may be some that you cannot view anymore.
Yeah, I know they were
Yeah.
at some point because I used to look at it, but I don't see them
Now
anymore.
the
That's why I thought I'd
now,
ask.
now
Okay.
the one that V talked about, that one still is available. The
Yeah.
one she talked about, the volume 3 video she talked about tonight, that one is Thor.
Okay, thank you. I'll get it.
if you want to, I can post it in the group.
Thank you. Yes, appreciate it.
No problem.
We could all benefit from it.
And again, if you're not in our Telegram group, I invite you to join. Check the chat right here on the Zoom and click on that link and join our Telegram group. But if we don't have any more questions or comments, that's all we got for
I
tonight.
have a quick question. The book that you talked about a little while ago,
Yes.
the F&C 101, where can I get a copy?
Oh, it's available everywhere.
You talking about in the bookstores like Barnes and Noble, places like that?
Lee, I will give you
Absolutely.
that information later on, okay? I'll get that for you.
Okay, thank you. Thank you. Thanks, appreciate it.
All right.
You're very welcome. Yeah, so yeah, get that book. All right, y'all. Is it time for the retreat yet? Is it April? 29th?
The retreat
Oh.
is gonna be coming up soon, you guys. You're gonna be able to get your tickets and everything secured for the retreat coming April 30th, 2026 to May 2nd. So look for it soon in the group. You'll be able to go to the website and purchase. Okay. So we're looking forward to this one. This one is gonna be like none other we've ever had before. We have huge surprises for this one coming up. And the good thing about it, this one we're gonna be able to have payment plans for every person that may want to come. So just FYI. So you want to be
Yeah,
there next year.
we had to step it up, take it to a whole nother level, y'all. So,
Yeah.
yeah, man. Woo, all right.
I thank you.
Thank y'all for
Folks.
staying on.
Thank you for the compliments as well.